Hello, everyone. Welcome to the charting room. My name is Jeremy Blossom. I am coming to you from Laguna Beach, California. It is a lovely day here. While we're waiting for JC to join us, start off. Tell me, how are you and where are you from? We are going to get started here in just a minute. All right. Thanks, Jeff. Nice to see you. Chicago, Savannah, Georgia. Anybody have, Venezuela. Hola. ¿Cómo estás, Regulo? Rayulo? Is it Rayulo? Brazil, Miami. Awesome. This is muy bien. It's lovely to see everyone's faces. It is an amazing day to be a trader. I'm sure all of you've got tons of questions. I know I do. It's coincidental what JC has been talking about and what happened today. So we'll be going over that. Fort Lauderdale, welcome. So for those of you, there's Miami, there's Fort Lauderdale, Savannah, Georgia. Is this the time of year? Is this the time of year where you're like, man, why do I live here? Because it's so hot and humid, or am I wrong with that? Is this like, yay, this is like why I live here? I'm always curious. Is this too hot and too humid? Okay, so we love it, and you're Miami. Miami's always awesome. So is Fort Lauderdale, Philip, actually, because you've got the ocean, right? You're kind of close to the ocean. Maybe Joe from Savannah, Georgia. What do you think? Is this the time of year where it's a little too hot? I know that in California, we've got about 2 weeks of the year, that's it, where it's actually pretty hot, and we're in the thick of it right now. And then we've got about 2 weeks of the year where it actually gets really cold. I know you guys are thinking, oh, please, cold, but it does. It actually, it's a different type of cold. So Philip says he's from Savannah, Georgia, and he says, it's hot as heck, but still love going to the beach. Yeah, you're close to the beach too. I do too. Yeah, it's record heat. I know. It's hot. Hey, what's up? There he is.
Hold on, folks. I'm going to
JC in the house. Man,
okay.
What's up, man? You didn't get my fog machine and like strobe lights? I wanted you to come out to like a full-on,
Another way to do it, you know how the Miami Hurricanes used to come out in the Orange Bowl with the smoke?
Yes.
You know, with the fire extinguisher? That's what I'm talking about.
Yeah. You know, maybe you can go get Morgan to hold the fire extinguisher on you, and she just, dusts you off a little bit.
A baby in one hand, fire extinguisher in the other.
Yeah. Lighten you up, man.
I'm sure that conversation is going to go real well. Babe, all right, so here's what I need you to do. Ready?
Yeah, and you're located, are you in your basement right now or no?
I'm not. I am I'm at the ground floor, ground level.
Ground level. All right. So
I'm building the basement office, which I guess I'm learning the hard way is a real pain in the ass.
Yeah, well, look, you're so domesticated. You're so
that lady that was complaining that I was drinking in the video, that I have a nice Barolo that I'm drinking, I'm going to have an extra glass just for her.
You're getting so much hate. Why are you getting so much hate? I said, you're getting so much hate. Why are you getting so much hate? Someone didn't like the language you're using now. Someone doesn't like that you're drinking.
I have enough friends. Like, I don't need any more friends. Like, if you don't like how we roll, like, that's cool. You know what I'm saying? Like, I'm good.
This is I also get a lot of really good responses. See, look, and you're getting right here. JC is the man. Thank you, Mike. We do get a fair amount of really great emails and messages saying that they love our program, and that's why we're here. We're doing this, but it's free. You're not getting paid. I'm not paying you to be here, right? So that's the big thing here. That this is actually a great segue to kick things off. It looks like we're getting up to critical mass here. So here's how I'm going to kick things off for tonight. My name is Jeremy Blossom. I'm with tradestocks.com. I interview the world's best about the markets. JC Parets and I are running this thing called the Chart Room. And this is where we get to leverage the mind of JC Parets. JC is one of only 2,500-ish CMTs in the world. He's probably the leading foremost expert in chartered market technicians. No, wait, let me say that again. In market technical analysis. I'll just say technical analysis. And he is absolutely a gem. And you've been killing it this year with your recommendations and your analysis of the marketplace. And what a beautiful day in the markets for tonight's discussion, JC. It's a beautiful, beautiful day. Before you say hello, wait 1 second. I also just want to remind everybody that this is for educational purposes only. This is not a solicitation to buy or sell a security. Please trade at your own risk. There's risk of loss in trading, and it's not suitable for everyone. JC, now you can say hello.
You're like the guy from like those old Micro Machine commercials. Remember that guy that would talk really, really fast? That's
yes. At the very end of every single yeah.
It's like the Eminem of Micro Machines. So good day today. You know, it's a great day because it's a great lesson to how the institutional world works. What you saw today is the shit show that is the alpha chasing in the institutional world. The journalists are going to write whatever, you know, come up with whatever narrative they want to make up because they're in the distraction business, right? Journalism 101, how to distract investors from what they need to know. Journalism 102, how to be more obnoxious with what you learned in journalism 101, right? So, you know, the truth of the matter is when there's so much chasing going on in what's working, what had been working, technology, communications, we've seen days like this before. It's classic, right? Classic unwinds. Communications, consumer discretionary, technology. The Dow was down like 700 points. NASDAQ was down 5% today.
Yeah.
Regional banks were up. Energy was almost up. Oil services were up. Airlines were up all day. Right? So what that tells me is that the market is not positioning themselves for the end of the world. It's that the institutional, there's a word that I want to use to explain it, but I'm gonna bite my tongue. It has to do with circles. So the point is they're chasing their tails around is what's going on. And there's that alpha chasing that individual investors don't have to worry about, right? We could just buy stocks in uptrends with good risk rewards. And we don't have to worry that this particular month, we may have had a little bit too much discretionary and we weren't in that energy. You know, like it's not like we have to answer to someone and be like, yeah, I wasn't in energy because I was in tech. You know, we don't have to do that, right? We have different objectives. I think it's really important to understand that our objectives and the objectives of a hedge fund or something like that are night and day. And liquidity is a real problem for these guys because they're so big. So when you get that rotation because of such extremes in sector overweighting and underweighting for that matter, which is as a function of performance, you want to be able to show your clients on the books that you were in the stuff doing well, not in the crappy stuff. And then that gets too obnoxious and that has to unwind. But that has nothing to do with the trend of the market or the sector. That's just as a function of the way the institutional world works. And today, you saw it, baby. That is, you know, so if you're not a hedge fund manager, be thankful that you don't have to play that game. That's a hard game to play.
Yeah, that's exactly what, you know, I worked at a fund for a while. And so these days would be like, oh God, you know, like, cause they play by a different set of rules. And to our point, this
to their detriment.
To their detriment, 1,000% to their detriment. So this is where I think this is a great lesson. Also, I know that we actually have a real lesson that we want to go over, which is candlesticks, right? So we do have something that you've prepared we want to go and discuss. However, I do think that this is the market just on a silver platter gave us a textbook example of the emotionality or I should say what you would want is a lack thereof as an investor in today's marketplace. So how many, I'd be really curious, this is honest feedback. Okay, I'm not gonna call it your name, so you could just shoot it to us panelists in here. How many people who are here tonight were a little spooked, like had a little bit of unease when they saw the NASDAQ? Because I mean, I know a lot of us are in the tech sector, some communication stock, things like that. If you were to say me or if you had a little, I'm not asking if you liquidated a position or anything, or like made any moves. So there you go. Thank you. Like I said, I'm not gonna call anything out. I just wanted to thank you. So there's some feedback here. People saying, yeah, absolutely. I did. So I got text messages by at least a few people directly to me asking me what my thoughts were today about what was going on in the markets. I got more text messages towards the close. I got some in the morning and more towards the close. Everybody having that same anxiety and fear. Now, again, I'm not saying that they did anything with their positions or anything like that, but we all have access to the news and our phones and we're connected, and you just hear blah, 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 blah. The sirens are going off. The best way I can try to explain what I was telling myself was especially during COVID, I've had to work from home. Okay. I'm in my office here in Laguna now, but I've had to work from home a lot of days. And there's times I'm right in the middle of something and my 9-year-old comes in and she wants my attention. My 5-year-old wants to show me his new karate move or something. And I got to stay focused, really, really focused on the thing I have at hand. And I just have to ignore the noise to finish the task that I'm in. That's the thing that I went through. But so thank you guys, by the way. I really appreciate the honesty. That's really good feedback. And like I said, I'm being honest too. I absolutely was. JC, how do you feel about today? Emotionally? Were you cool as a cucumber? I mean, you got a lot more experience than I do, but would be curious to know what you felt.
Yeah, I mean, listen, if you're getting emotional about one day's move, your position sizing is way off, right? If one day causes anxiety in your life and your blood pressure rises, you're too big. You're obviously too big, and that's a good lesson, because there's no reason for you to have anxiety over one day's move, no matter what the day is, right? Yeah. So I think that's the answer. If you're losing sleep, if you're getting emotional, you're too big.
Yeah, somebody sent us, I won't say, I'm not saying names here, but somebody said it's good risk management lesson 2. So, that is true, what today was. To your point right there, if you've got too big of a size, which we all know if we do or we don't, maybe I do. Maybe I do. All right. Maybe I just don't want to admit it, JC. Maybe.
Well, if you had any anxiety today, if your blood pressure rose at all, in any abnormal way, you're too big.
It was more. I just, frankly, not so much. I really was looking for some opportunity, maybe, more than anything else. I was checking in on a couple of things. So I want to do any kind of rebalancing, buy a little bit more or something. So, which I didn't do a thing. I didn't touch a thing today. So it's just, maybe it's more I'm now which I'm excited because I know that yesterday you did your monthly meeting with all of your subscribers. So I got that email about what you guys went over and discussed. And I think it's actually kind of perfect because people are already sounding the alarm that we're going to be in a bear market, doom and gloom.
Yeah, but I hear you hear that every day. Not just today.
Yeah, no.
I've been hearing that.
Yeah, but when these things happen, the bears that have been perma bears, right, that have been getting their ass handed to them.
Well, now they're crypto experts. Now they're moving on to other things. Now they throw conferences and are experts in crypto because they got so steamrolled that they don't want to show their face in the equities market anymore. So now they're conference throwers that are experts in cryptocurrencies. Most ridiculous shit I've ever seen in my life. These freaking losers.
Yeah, we see these people. What JC's talking about is look, we're around, right? We're in the chat rooms and the blogs, and we kind of know where the core people are. And there are people who are haters and who throw bogus research, bogus advice out there. And poor people, man, they you can see. I don't know if they're actually making decisions off of this or not. I hope to God they're not. And then guess what? We see the position. We see what they say to do. It doesn't work. It doesn't happen. And they would have, if they actually did anything that they said they did, they would have lost their ass. And guess what? Then they're no longer there. They went bye-bye.
And they just go away. They disappear. It's not oh, hey, I was wrong. But now I think that we should do this. It's like, okay, no, I'm just going to disappear now because I fucked up so royally. And I'm so embarrassed because I was so wrong for so long, and my ego was too big to admit that I was wrong, and I kept pounding the table, and with every table pound, I got steamrolled even more, and now I can't show my face, so now I'm gonna go pretend to be an expert in something else because they don't know what a charlatan I am yet.
Yeah, exactly. And then they just bob around until the same thing happens to them in crypto.
Yeah.
They'll
be experts in precious metals next year and the year after that, experts in pot stocks.
Yeah. They might swing into like live cattle. They should. I don't see a lot of chatter about live cattle lumber.
No, they're going to start a venture capital newsletter, how to be a venture capital, whatever's next.
Angel investing. That's right. Well, nice, man. Well, we do have a lesson in hand. So the way that these segments work here, guys, is that we start off with a little bit of a banter, a little bit of poke and jab. Sometimes
just ranting, just trying to get it out of my system because nobody cares. Like my wife certainly doesn't give a damn what I think about these charlatans. So I just tell Jeremy because he has to listen to what I say. So
yeah, I do. But I also appreciate it, and I usually agree. So not all the time, but sometimes I do agree. But tonight we actually wanted to go and talk about what
Greek Italian.
Oh, a Barolo.
Barolo from Piemonte, the Nebbiolo grape. I don't know. Before we get into it, while I'm opening a bottle of wine, you want to know what a bummer because of these fires in Napa where they're testing our grapes in our vineyard in Calistoga to see if they have like that poisonous compound that comes from the ash, those raining ash on our grapes for 5 days. So we're getting the test results, and if the test results come back positive, it's a squadouche on that vineyard for the year, and we're gonna have to do our own varietal only. But if we get the test back, and the preliminary tests from Chateau Montelena, which is right next door to us, they came back negative.
Oh, that's good.
So there's like a 50-50 chance right now about whether we're gonna get it. So very, very nervous Nelly over here. So if anything's got my anxiety up, it's the test for the grapes.
Yeah, I know.
Because I don't have any control over that. At least in the market, we can control our risk. In the grape growing business, like it's just Mother Nature, it's just science.
Yeah, there's not a chart for that, unfortunately.
So that's the sitch there.
Yeah. Well, my best wishes for you tomorrow. Shoot me a text if with the results. Now I'm curious.
Yeah, because you're gonna get free booze if we get it. So you got a case of wine at stake here, dude.
Absolutely, dude. I want to celebrate. I can't wait to taste this stuff too. So, so tonight we wanted to get into one of your favorite indicators, things to use when you're watching price action. So, folks, as we always talk about, what's the most important indicator of all time? Price. There are a lot of different ways that you can look at it. Some believe that the closing price was that Charles Dow that only liked the closing price.
You said it, man.
So Charles Dow only liked the closing price. So for those of you who like the closing price and want to look at something, you can look at a line chart. That's a nice, easy, clean way to see what the closing price is. However, a very popular one and almost the default probably on 95% of everybody who's watching tonight is candlesticks. So tell me if your default chart, now this is something everybody can see. If your default charts, my default chart I'm staring at right now is a candlestick. So my default setup is a candlestick setup. Before I mean, you and I have been around long enough. I really do feel like I was around when candlesticks were not the thing. Just typical bar charts were like the thing,
There was a guy by the name of Steve Nissen, who I actually just had on the podcast. I'll be publishing that in the next week. A really interesting fellow. He went back and he had to hire a Japanese guy to translate all the old Japanese books into English. And he's the one who brought Japanese candlestick charting to the Western world. So that was him. So I actually went over the whole story. He's the guy. It's his fault that everybody uses candlesticks.
Incredible. What year was that? When did he start that?
It's I think it was in the 90s. May have even been, I think it was in the 90s, early 90s maybe. He's never even been to Japan. I'm like, dude, you never been to Japan?
How is that possible?
I'd write a book about Japan just so I get to go again. I mean,
Yeah,
you know,
right. Like, oh, that's super. That's kind of wrong, actually. Now that
so wrong. And I
so
told him,
wrong.
I'm like, dude, and he's like, oh yeah, you think I should go? I'm like, oh my God, this guy.
Yeah. So I think that anyway, so yeah, let me know. So are you guys, is your default, JC, is your default charts candlesticks?
I don't necessarily have a default, right? I have different types of charts for different things that I'm doing, right? I've got line charts for all my intermarket and ratios for sure. I use line charts even for individual equity sometimes, depending on what I'm trying to do. My relative strength lines are all line charts. I like looking at bars a lot because you get highs and lows, but you're not getting all of these candlestick, all the noise in the candlestick. So it's a more keep it simple, stupid approach. And then you got the candles themselves. And, the reason that I wanted to talk about that today specifically is because a couple of days ago, we got new monthly candlesticks. And what these monthly candlesticks allow us to do, or force us to do, I should say, is take a step back. It's easy to, you started off, oh my God, today. What did the Dow do today? Not just you, and not just today, just in general. Hey, what did the market do today? What did the Dow do today? Oh, how's the market? It's so easy to get lost in the noise, not to mention all the people whose job it is to be noisemakers. I mean, this is their job. Like, okay, they have morning meetings, and it's like, okay, how can we distract the investing public as much as we can today so that we can sell our sponsors to our commercials to our precious sponsors, right? Like it's criminal is really what it is. It's malicious intent on their part. So I think it's important to understand that there's so much noise and people trying to make more noise, and the louder and more attention that you give them, the more money they make, right? So, and it's really hard to avoid that as humans. So these monthly charts, we get one data point per month. It's 12 data points a year. So it's basically 30, 40 minutes of work each month. That's 7-8 hours of work a year. That is the most valuable 7-8 hours of work I put in a year by like a long shot. I couldn't even tell you what's next on the list in terms of most valuable. It's not even close. So if you're not looking at monthly candlestick charts, again, 30, 40 minutes. And that's me, that I have a zillion monthly candlestick charts because I do this professionally. You don't need as many as I do, right? Build your list, the ones that are important to you, 150, 20, 300, whatever it is that it suits you, and just you do that consistently, because it forces you to take a step back and identify the direction of the primary trends. And if you're investing alongside the primary trends, the probabilities of success are like super high relative to the alternative that when you're fighting trends. So man, whether you're a swing trader, day trader, short-term trader, long-term investor, I don't care who you are, this is the most valuable part of my entire process, and I highly encourage everybody listening out there to do the same.
Yeah, and I got a little tidbit out of that. I think I'm definitely guilty of this. I don't have a default list, JC. I've got my stocks that I'm in. I got a little short list of stocks that I follow, but I actually don't have a necessarily like go-to list that I'm looking at from like a macro standpoint. I don't go to bonds on a regular basis. In fact, I probably have, if I'm being really honest with you, JC, I don't want you to, punish me or anything, put me in time.
I'm judging.
Yeah, judging, go for it. I really don't even have like a time of week or month set aside like religiously where I'm like, okay, let me spend some time looking at charts on fixed income. And
yes, but Jeremy, it's because you're the CEO of one of the fastest growing, top 500 growing companies. I don't know if you heard, in the world, or like in the Milky Way or something, right? What is it? You're like the top growing company in the Milky Way?
It's in the galaxy. So of the entire galaxy. Thank you for that.
Congratulations, by the way.
Thank you so much. It's such a vanity kind of like a stupid, metric, to be completely honest. I'm a marketer, right? So like what we do for a living is I help companies grow, right? That's what we do. That's my favorite thing.
Especially your own.
Especially my own. And so there are things that you do that are kind of quintessential things. And doing that, if you've got the story, why not publicize it, right? So we had the story and we decided to, throw the bones in to get it published.
Well, my point is that you have a full-time job and you're a successful businessman, an entrepreneur, and the whole thing. You call yourself a mark, whatever it is that you do. You could be an engineer. It doesn't matter.
Sure.
You're doing what you're doing.
Yeah.
So that's why you come to me, right?
I was just gonna say, I was like, thank God I got you, because like.
Well, that's my point. So like our clients, like a typical client, like a financial advisor in the Midwest, 45, 50 years old, couple $100 million in assets, wants to, what does he want to do? He wants to spend more time growing his business, and he wants to spend more time with his family, not ripping through 5,000 charts. That's what he comes to me for, right? But that doesn't mean that you can't get 30 stocks or 30 indexes around the world, and that you go through once a month just to kind of put things back in perspective. So even if you're coming to us for the analysis and we're doing all that for you, how long is it going to take? 30, 40. Like just think about like what are the most important assets in the world? Gold, oil, copper, S&P 500, NASDAQ, maybe the German DAX, US dollar index, right? I mean, just the common sense ones, and then maybe that list grows, because that's how my list first started. And then, well, if we're going to have copper, then we got to have the base metals equally weighted index. Well, if we're going to have oil, then how do we not have natural gas? Well, if we're going to have, so for me, it's this never ending, but that's me, because I'm we do this for a living. A lot of people out there are doing other things. So that was really my point. So your classic example of a busy, successful dude, coming to us for a little help. No big deal.
Yeah, that is the best part about my job, is I get to talk to the smartest people in the room all the time about my second favorite thing to talk about. I love talking about growing businesses. My second favorite thing is growing my own bank account, and that's through trading.
What my second favorite thing is?
Wine.
I was on this podcast, and the way they introduced me, they're like, JC Parets, chartered market technician, also knows about crushing grapes. I was like cracking up.
I like it. Crushing charts and crushing grapes.
Ooh, I like that.
Mm.
I just crushed some mofongo a little while ago. Do you know what mofongo is? Do they get Caribbean food out west?
Never heard of that in my life.
Oh my God, get involved. Look it up. Get involved.
All right, I will. Maybe I'll start a restaurant.
Like a
all right,
Dominican, Puerto Rican thing.
Into your lesson. I'd love for people to hear about this. Let's dive in.
All right, so we were talking about candlesticks and how I use them, and we talked about Steve Nissen, how he brought them over, and how the monthly version of this is, to me, such a valuable tool. But let's talk about what a candlestick is. And remember, this is multiple time frames. So if we're talking about a daily chart, then we're talking about that each candle is going to be 1 day, 1 days of data. If we're looking at a weekly chart, each candle is going to be 1 week of data. In the case of a monthly chart, it's going to be 1 month of data, hence why we only get 12 every year. Then, of course, you have the maniacs with the quarterly and the annual candlesticks. Those are, I'm not going to lie. I've got my quarterly and annual candlestick workbooks as well. I'd argue they are. I never look at them ever. I think I could do more on the annual pivot sort of analysis. I can improve there, but that's a whole nother story. It has nothing to do with candlesticks. All right, so let's focus on what a candlestick is. JC, what is this Japanese candlestick thing that you're always talking about? Okay, can you see the screen, Jay?
Yeah, I can. Yep.
Okay, so on the left, we have 2 candles here on the left and the right. So the big rectangle here on both of these, right, is what we call the real body. So a candlestick like the bar chart is going to give us an open, high, low, close. So those are the 4 data points that we're going to get, but it's going to look different than the bar chart because it's going to look more like a candlestick. So the real body is going to be the price between the open and the close. So any data between the open and the close is going to be the real body. But anything above the close or anything below the open, right, that didn't fall within that frame is going to be the shadow or the wick of the candle, right? The Japanese call it a shadow. We call it a wick because it looks like a candlestick, right? So the wick. So here's the deal. If the real body is hollow, like the one on the left is, that means that the close was above the open. Okay?
Yep.
If the candlestick is filled, in other words, the candlestick melted, you're going to see a filled candlestick. That means the close was below the open. Make sense?
Yep.
All right. Open, high, low, close, real body, and the wicks are the shadows. All right, make sense? All right, now let's see if we can, oh, wrong way. All right, so now we're looking at 3 candlesticks. So what happened here? We have a filled candlestick. So what does that mean? We know that the close was below the open, right?
Right. Yep.
So basically what happened here, we opened up around here, kind of rallied, sold off, you know, kind of maybe bounced back a little bit and closed near the lows. That's what happened on this particular day or week or month or quarter or year or 1 hour period or 1 minute period, right? These candlesticks can represent any time frame you'd like. It could be a 10-minute time frame. It could be a 30-minute time frame, right? All right, so what happened here? Well, we know it's hollow, so what do we know? We know the close is above the open. So if this is the open and this is the close, so what happened? We opened right around here, maybe sold off early, rallied up, maybe didn't quite close at the highs, but pretty much near the highs. Positive day, right? And then what happened here? Well, we have a filled candle, so we know that the close was below the open. So we probably opened up here, rallied way up here. The intraday probably looked something like this, and then melted down and went out near the lows, right? So that's basically what happened here. So what the Japanese candlesticks do is they tell a story that other types of charting, ways to chart price don't necessarily tell you. You're going to get the best story of what happened in that particular period with Japanese candles. And when I say period, if it's a day, it's a day. If it's a week, it's a week, you know, right? If it's an hour, it's an hour. So now we have what we call dojis, D-O-J-I, where the open and the close are pretty much near the same price, right? So here what happened, we opened right here, we rallied, we sold off, and ended up closing pretty much right where we opened. What happened here? We opened right here, we rallied, we sold off, or maybe we sold off then rallied, right? We don't know that. We don't know the order of what happened. We just know what happened. So now let's talk about the colors of the candlesticks, because we talked about the hollow or filled. Did I not here? There we go. Oh, you know what? Hold on, guys. All right, here we go. All right. So the color of the candlestick has nothing to do with what it did during the day, but where it closed relative to the prior period. So if it's a green candlestick, it closed above the prior period's close. And if it's a red candlestick, it closed below the prior period's close. Okay, so let's talk about 4 possible scenarios. Here we have a hollow green candlestick in the upper left. Jeremy's like taking notes. He's like, okay, hollow green. Okay, so, right? Because this is stuff that like maybe people take for granted or might be confusing. So I think it's really important. Like, Jay, have I said anything that you didn't already know out of curiosity?
Yeah, you did.
And so, you know your shit.
I do. So I 100%. So yeah, yep.
All right. We're looking at a hollow green candlestick. So what happened here? We opened at the lows, near the lows, and rallied and closed near the highs. And since it's green, the close here was above the prior period's close, right? And it was green and hollow, so that means that it closed above the open. What happened in this hollow red one? Well, in this hollow red situation, it actually is hollow but is red. So it actually closed below the prior period's close. So how is that possible? It's possible because what happened is that it gapped down in the open, rallied throughout the day, or throughout the period, I should say, but closed below the prior period's close. So it was up from the open, but down from the prior close. That's why it's red and hollow. Feel me?
Yeah, yep.
So now let's talk about a green filled one. How's that possible? Well, it closed near the lows of the day, so well below the open because it's filled, but it's green. So that means it closed above the prior period's close. So what happened here most likely, it gapped higher, sold off throughout the day, yet closed above the prior period's close. So it's a filled green candle. And then you have the filled red candle. And just so you know, the two most common ones are hollow green and filled red. These two are much less common because the likelihood of a gap up and then a just complete sell-off, you know, is much less likely than it just rallying throughout the day, closing near the highs and naturally above the prior period, right? Or closing near the lows below the prior period in the case of a downtrend, right? So the one on the upper left and the one on the lower right are the two most common. And then every now and then you'll see these other two, all right? So that's really what that means. And then just to really kind of bring it all back together, it's less about the candlestick itself and more about where the candlestick showed up, the location of the candle itself. So here we're looking at the US 10-year yields. And these are the July 12th lows. So when these candle formations show up, coinciding with traditional Western techniques, that's the real magic. So here we're looking at former support. Like if you zoomed out on this US 10-year yield, you'll see that interest rates bottomed in July of 2012 at this exact price. So where are we seeing this bullish reversal candle taking place? Right at those former lows, and interest rates ripped from there. Right? So it's more about where. And in this case, we're looking at a bullish reversal. So what happened here? We gapped down lower. We opened up here and then rallied throughout the day. That's called I think, you know, it's not technically a bullish in golfing. They have a name for it. What's the name of it? I used to have to know these names because they test you on it for the CMT. But the truth is, the names are irrelevant. It's more the implications that we're interested in. So I've forgotten some of the names because there's so many names. You got the hammer and the doji. You got things called like, you know, because a lot of the Japanese names has to do with like war. So you have like, you know, the three black soldiers and the three crows and the abandoned baby. Like that's a real candlestick formation, the abandoned baby. Like I'm not even kidding. So it's like the most ridiculous names ever. I got the book around here somewhere and like I got all the names and I memorized all of them because I thought I needed to know them, but I did not. Either for the exam or in real life, but they all have silly names. So this is a bullish candle. So a good example of that. And then here's another good example of a bearish candle. So here you have former resistance. This is, we're looking at the Russell 2000 actually. Oh, I remember this day. So this was, I got squeezed so nasty, man. This is 2008. I was in Texas. College, I was going to Texas A&M college football game and against Miami, and I don't know how else to put it. I was balls deep short stocks, like irresponsibly, like there's just no other way to say it. I was irresponsibly short equities, and then these Nazis decide that they're going to change the law where you can't short financials. So here I am trying to have a good time, go watch my college football game, and the squeeze, because I'm like so leveraged, because this is 2008, so I am 26 years old. So I still had rough lessons to learn. And this was one of them. And they announced that you weren't allowed to short financial. So they changed the rules in the middle of the game. That's always fun. So I got the shit squeezed out of me that morning. However, look at the candle. Melted all day, went out at the lows, and then completely collapsed and the world fell apart after that. But man, that morning, woo, talk about like learning how position. I mean, and the worst part of this whole thing is that everything worked out great for me and I looked like a hero. But that morning, that was a rough one. This was like October, late September, 2008. Woo!
Oof.
It was rough. It was rough. All right, so that's my spiel on candlesticks. Just want to reiterate the monthly candles. You know, if you do nothing else, take 10, 15 minutes every month and go through them. I mean, come on. To not do it would be irresponsible, I think.
Yeah. Love it, man. Yeah, like I said, I learned some stuff right there. That was really interesting. And I should say jog.
What'd you learn? Tell me what you learned.
I forgot, I guess, the four I knew that's where you were going with this thing, was in I see these chart patterns, and sometimes they're filled and sometimes they're not filled. And I'm like, forget why are some of the green ones filled, the other ones not? Why are some
Well, usually it's because the candlestick settings are wrong. So like in Bloomberg, for example, and I don't care, I'll hate on Bloomberg. I don't hate Bloomberg, but I'll hate on them. Because he's the man. Business-wise, I mean,
yeah.
This guy before 2008 sold, like, I want to say half his company. Then the market crashed, and then he bought it back for pennies on the dollar. Now he owns 90-something% again. He's doing like $400 million. I mean, so like when I say I'm hating, like there's no, like I say it with like the most respect possible. And it's not like I'm looking for a Bloomberg contract. I don't give a shit. I'm just saying that because that's mad respect. Like, the guy's a G. And like I go to Bloomberg to do like TV and stuff. And like he's just hanging out in the lobby, like just hanging out, no big deal. I see him all the time. Well, not all the time. When I used to go to Bloomberg to do TV all the time, I used to see him all the time. So the candlestick patterns, the candlestick settings on Bloomberg are wrong. And in most charting softwares, they're just wrong. So that's something that you need to consider.
Okay, maybe that's why. What about Koifin?
I think Koifin's got it right because he's got me and Bruni in his ear.
Good.
To be perfectly honest.
Good. Yeah, I see you use. I figured as much. I switched over. Maybe TD Ameritrade's charts. That's my.
They got them right. I think you could change the settings, so you got to make them right. But I don't know if the default is right. But you could definitely get it. I know Michael's asking me if there are any available statistics on candle patterns. Candle patterns in and of themselves are not signals, Michael. To be clear.
Yeah.
It is a way to visualize data. That's all it is. So it's not like a signal. It's a way to visualize data, and then you take that data and information and add it to the other stuff. Like in the case of, we're looking at support, and then there was a bullish formation, if you will, at that same level. Like, so that's what I mean by just additional information now, rather than, this, because there's softwares that are like, we're going to tell you the buy signals on the candlestick patterns. Like, no. That's not like a thing.
Yeah.
So I hope that answers your question, Michael, if I wasn't clear about that before.
Yeah, that's good. That's a big thing I think that a lot of people, should really consider, right? Is like going back to the basics. So many times in marketing for us, my team, when we're trying to get something that's not working, I just go straight back to the basics. So, Hannah's like, that was really helpful, back to basics. She liked it.
As long as Hannah likes it, because Hannah's very nice. She's a very nice girl. I never want to make Hannah upset. Every time I see her, she's smiling. She's always so happy.
I know.
So whatever I can do to not make her upset.
We're having a good.
I hope you're listening, Hannah. It's my job to keep you happy.
Yeah, that was great. And another really good point is that the candlesticks by themselves are not the signals. So a lot of traders, I couldn't tell you how many times I've gotten screenshots like, see this? I'm like, yeah. And well, that means that the market's going to do this. I go, no, it doesn't. So that's not at all what that means. You got to look at it in its entirety. So
the holistic approach.
Mm-hmm. Amen. So, all right. Well, speaking of the holistic approach, I'd love to get your take on some things. So you already kind of let the cat out of the bag. If you were subscribing to his, if you're one of his paying customers, you already seen what he's kind of come out with yesterday. But I'd love for you to kind of give us some of that JC magic. Give me some of that heat.
Oh,
right?
Man. Speaking of the Miami Heat, 6 in a row in the playoffs. I forgot what losing feels like.
Mm-hmm.
I mean, swept the Pacers like they didn't even show up. The Greek Freak, we've completely shut him down. I mean, that hottest team in the league, baby. All right, sorry, that was my rant on the Miami Heat. So this, when I saw this chart, I knew, Jeremy, this is the Michael Jordan trade. You want to see the Michael Jordan trade?
You, buddy.
There it is. That's the Michael Jordan trade. Long Nike, short Hanes.
Yeah, I love it. That's sick. I love it.
Isn't that funny?
It's super funny, man. Yeah, I wish we wouldn't get like sued for copyright infringements for like blasting this stuff out.
I wish we wouldn't get sued for this sort of thing. All right, you ready? You really want to get sued? Ready? Here we go. Boom.
Ah, look at that. Yes.
Now that's how to get sued.
I started. That's so sick. You know what? If Nike, if you see this, because we do publish this, let's sponsor JC. Let's get him some Nike gear, right? Like, let's like hook him up. Let's have like imagine Nike for a second that the wall behind him is nothing but Air Jordans. I'm just saying. I think we should all sign a petition. All 62 people that are here right now, we should all sign a petition.
I'm like a much slower, shorter, without any vert version of Michael Jordan.
Yes.
Other than that, it's the same. Totally the same.
The ball
I probably don't have the gambling addiction that he does. All right, you want to talk bubbles?
Yep. I love bubbles.
So I like bubbles because they tell a good story, like a candlestick. But now we're looking at bubbles. So what's going on here? So on the y-axis, we have the drawdown from new 52-week highs. So the higher to the top this is, the closer to new highs it is, right? That's why US is at the top. And then the further to the right that it is the change last month. So the performance for the month of August. So the U.S. up to the upper right, great performer, of course. But I think it's important to see that there were not many losers. Malaysia, Argentina, Brazil, Thailand. Those were the big losers. Nigeria coming in flat on the month, you know, for you Nigerian stock traders out there. But the vast majority was higher, which is really the point of this. So sort of reiterate that we are getting an expansion in breadth participation, not deterioration. Are we seeing fewer countries participating, or are we seeing more of them? And I think this suggests that more of them is what we're seeing. Let's talk about new highs. Consumer discretionary, healthcare, communications, all new highs across the board. Are we getting, is this evidence of deterioration in market breadth? Or is it evidence of an expansion in market breadth? And to me, I think this is evidence of expansion. Let's broaden that out, get a little more obnoxious here. Consumer discretion, these are all monthly candlestick charts. Discretionaries, tech, healthcare, communication, staples, materials, all of them making all-time monthly closing highs. Every single one of them. When was the last time you could say materials and all-time highs in the same sentence? Right? It's not really like a thing. Something else I'd like to point out is consumer staples. People were like, well, JC, consumer staples making new highs, a defensive sector. No. Go back and look throughout history. Consumer staples making new highs is consistent with the stock market overall making new highs. It's when consumer staples start to outperform, that's where the trouble starts. So consumer staples could do fine. We just can't have them outperforming. When you start seeing consumer staples outperforming, that's the problem. That's where the problems start. Every time we've gotten bearish over the last several years, a lot of that has probably had to do with the fact that consumer staples started to outperform. Let's talk about China. These are the A shares in China. This is further evidence of rotation into emerging markets. With the fact that we're taking out the 2018 highs, I think is the big one, Jay. In January of 2018, that's when stocks around the world stopped going up. So the fact that we are now sort of exceeding those highs, to me, is evidence that globally, that's risk appetite, not risk aversion. And then the last thing I want to show you on that last front is the consumer discretionary versus consumer staples going out at new all-time highs. This is very, very consistent with an environment that we are getting paid to, getting rewarded for owning stocks, not being rewarded for selling them. So this is the long-only mutual fund community trade. These mutual funds can't go to cash. They can't short stocks, right? Because it's in their mandate. The way they get their bonuses is by outperforming the overall market. So if they believe the market's going to go higher, they're going to overweight discretionary. They're going to underweight staples. And to be clear, what are discretionaries? Where we spend our discretionary income. Autos, homies, right? Automobiles, home builders, retailers, right? Discretionary. What are staples? The things that we're going to buy and do no matter how bad the economy is. We're still going to brush our teeth and wash our dishes and drink beer and smoke cigarettes and Coke and the whole thing, right? Coca-Cola. For you guys, get your head out of the gutter. New highs in the ratio. That's consistent with higher stock prices, not lower ones. Now, do you have any questions before I really bring in the sexy stuff? Tell me before I bring in the big guns.
I do. But
now's your time.
No.
We're about to get pretty sexy.
Ooh, should I take my jacket off?
It's about to get hot in here.
Oh, dude, we need a playlist. We need a charting room playlist. I think I have some, but it's gonna derail the combo. So I will hold it, and we'll add plenty to talk about. So go for it, man. Bring on the sex. We got 10 minutes.
No questions. All that, like, okay, no big deal. Just,
whoa. Maybe somebody else does.
No big deal. Like, oh yeah, JC, all-time highs. Buy everything. Sounds great.
So, okay. Well, I'll stall to allow our participants to formulate their question.
Michael has a question on, like, to an extreme. If there was a pattern that showed up, say, 500 times and 400 was a trading profit, Michael, go do the work, buddy. Get after it. God bless you. Let me know what you come up with. You know, for me, it's more of an art and less of a science. You know, all these Silicon Valley types, like these Indian coders and stuff like that. Like, when they hear that I look through 5,000 charts a week, like, their heads explode. They're like, JC, there has to be a better way, right? Like, this has been going on for years. And I'm like, there isn't a better way, because we can build some. The thing is, Jeremy, humans are so silly. They spend all their time trying to figure out ways to not have to do this one task, when you could just do the damn task. You're going to get so much more out of it. You know what I'm saying? You're going to get so much. Just put on some music, pour yourself a glass of wine. Doesn't matter what kind of music, and just sit there going one by one, you know? Yeah, just one by one. It could be hip hop, it could be jazz, it could be the Beatles, it could be country music. I don't give a damn what it is, as long as it ain't the television. You know what I'm saying? Like, listen to some music. It's good for the soul. It's good for the soul. And just go one by one. Anyway.
So, I think that someone asked a question here. Do you think today's sell-off will recover very quickly? That's something that we can talk about. But before you answer that question, and before you show us the
sell-off in what?
The sell-off we had today.
In what?
Like, in the markets.
Like in the U.S. stock market, like in the NASDAQ?
Yep. I'm going to go out on a limb and say he's talking about the NASDAQ.
Yeah, I mean, the NASDAQ's been like the biggest, the greatest performer in the history of stock market. So, like, it's correcting. Yeah, all right. And like I said at the beginning of the show, I don't know if they missed it. This is the institutional alpha chasing. That's what's going on there. I mean, airlines were up today. Regional banks were up. Oil services were up today. Why do you think they were up? Because, like, the fundamentals changed? Or like whatever the 26-year-old journalist wrote about today? Like, no. Yeah. It's just the way the institutional world works.
Yeah. So what I wanted to share with everybody, because he's about to drop some heat.
Dropping heat.
Drop some heat. And for some of you, this may be the first time you're being introduced to JC. For others, this may be your third, fourth, or fifth time in the charting room. If so, welcome. Thank you for your loyalty.
And people, just so you know, like, it's like 9 o'clock on the East Coast. I've had a fucking day.
Yeah.
I've had a day. All right. Yeah. We'll leave it at that.
Yeah. And he's got
a little Barolo, well deserved, I think.
Not only that, but you've got what, a 4-week-old at home?
She's 6 weeks.
6 weeks? 6 weeks?
6 weeks. She's getting old.
I know.
Don't sell her short.
Driving soon. So I mean, like, yeah, you do.
She loves charting. She loves charting and Motley Crue.
Oh, nice.
Yeah, Shout at the Devil is their favorite song.
Ah,
She's like,
love that.
shout, shout,
Yes.
shout with the devil, shout, shout. So she likes it because every time we say shout, she shakes. So she's like, ah.
I can see
It's her
that,
favorite
yeah.
song. My mother-in-law loves the fact that her favorite song is "Shout with the Devil."
I was just gonna say, I'm sure your whole family is
My
like, what?
Catholic mother-in-law.
Yeah, like, I don't know about that. Well, what I was going with this is that, boom, I just dropped it. There is a absolute no-brainer way to get access to more of the sexiness, more of these amazing calls, more of JC. And if you're brand new, even if you've been with JC for a while, click on that link below. There's no absolute no-brainer way to get started with All-Star Charts and with JC. This is a partnership with tradestocks.com. We're bringing this to you in an effort to help, A, get you more educated, and B, to share an approach that, frankly, you just really won't find anywhere else, conducted by one of the best humans I know, one of the smartest guys I know. So if don't take my
What about
word,
me? I'm not here.
I'm talking about you. Yes, yes. Putts. No, for real, guys. If you don't take my word for it, though, obviously don't take JC's word for it. Take them, put them up on the challenge. Sign up, see it for yourself. It is absolutely spectacular. I could go anywhere. I could do anything I want on a Thursday night myself and talk to anybody I want. I don't want to be anywhere but with you, JC. So click on that link. I wanted to make sure I got
Because
that.
you're big time. Like you can talk to pretty much anybody you want. Like
I could pull some phone calls, dude. I could be like, all right,
you're kind of a big deal.
not as big a deal as you. I'm trying to catch up.
Different worlds. I'm cool like in a small circle of math nerds around the world. You're a little more.
Small circle is much bigger than mine, dude. So you're floating a much bigger.
Your
pond.
circle's better looking than mine.
It's a more diverse crowd on my side.
Yeah.
So all right, so let's see the sexiness. We've hyped it up enough. Everybody, check out that link. You won't be.
So this is for Under the Hood. The link that Jeremy just dropped. What we're doing is that we're scraping the internet and the world, for that matter, looking for stocks that all of a sudden are showing an unusual amount of investor interest. So we're looking at different brokerage firms and the increase in accounts that own those stocks. We're looking at social media networks, some of which are public, some of which are not. Because I'm friends with some of these CEOs, so they just give me the data because they want me to have it. We have clients that literally just dump data on us and be like, here, we want you to have this so you can help us better. And if you have this data, you can help it. And the best part is we get to keep the data and use it, for ourselves and stuff like that too. And listen, it's not all like all this magical data. Sometimes the data sucks and it's completely useless. Like, let's keep it real. But sometimes it's like, we're just like looking at each other and it's like, yo, this is sick. Right? So after all that, and we continue to get new data sets. Like we have stuff that didn't exist a few years ago. And a few years from now, we're going to have stuff that we're going to look back and be like, how did we not have that whole time? Like it's just the way it is. So we're always going to be up to speed on that because that's just how we roll, right? I mean, that's what we do. All right. So that's what that is. So what are we doing? We're creating that universe of stocks that all of a sudden have more interest. We could be like, hey, these guys are onto something. Let's buy with them. Or these people are crazy. We're going to short it, bet against them. Like we did with Nikola a couple months ago. And like hit our target like in 2 days. Something stupid. All right. So now we're taking that philosophy and we're creating another universe. And this is the first time ever in the history of humans that we have come out and shown anyone. By the way, I don't know if you know this, Jeremy. Nobody's seen this. Not even the client we built it for.
Oh, no way.
So this is that just so you know, nobody has seen this. So stop the presses. So our premium clients get access to this. So if you like the under the hood and you want to step it up, this is part of what you'll have. So this is what we're calling, Jeremy, until you geniuses come up with a better name. Itai's like, yeah, that's cute. We'll come up with something better. This is the 2 to 100 club.
Love it.
Jeremy's like, 2 to 100. Okay.
Yeah, I know.
I'm intrigued.
I'm getting actually really excited if this is what I think you mean by 2 to 100 here.
What we're looking for, because if you're between 500 million and $2 billion market capitalization, you're a small cap stock. So once you cross over 2 billion in market cap, you become a mid cap. So what we're doing is we're looking for those stocks that are graduating from small cap to mid cap, making new highs within about 13 sectors that we think can scale from 2 billion to 100 billion. So this is the 50 bagger crew. You know what I mean? We're looking for 50 baggers. And to be clear, we're not literally buying it at 2 billion and selling it at 100 billion. That's not what we're doing. We're creating a universe of those stocks that can be 100, and we are narrowing it down to just those between 2 and 30 billion, making new highs amongst a series of industries, 13 industries specifically that we've hand selected that we think can scale from 2 to 100. And along the way from 2 to 100, we want to take chunks. That's the idea.
I love that. Freaking love it.
So that's part of, just like under the hood, Jay, this is part of that bottoms up approach where what this does is that because all of our analysis is top down, this bottoms up approach is able to supplement that work so that we don't miss anything. So, and with that, I'll give you one quick trade, and that's Dynatrace, DT, baby. That is the trade of the week. I don't know if you got your email on Tuesday, Jeremy, on the DT.
I did.
Dynatrace is a $13 billion company now, 12, 13 billion, part of the 2 to 100 club. And then like anything else, what we do, all this universe is gives us a heads up that we should be looking at these particular stocks for whatever the reason. And we have a lot of different reasons, a lot of different universes, most of which you guys don't know about, but you will. I like this DT software name. So it's the right sector. It's in an uptrend. It's been basing for 3 months. I think it breaks out to new highs. And if the stock's above 45, this needs to be a long. If it's below 45, stay away for now. Above 45, I like it long. Target above 61. And that, my friend, is technical analysis.
I freaking love it, and that is amazing. Does everybody else love that? Let us know, because that's some good stuff right there. That's amazing, dude.
What do you think?
You
got the old thinking cap on, you know?
I do. You know, yeah, I do. I was actually what you're finishing that off, because I did see that in the newsletter. I wanted to check in on something because you said this casually, and I've been just kind of like, I brought it up to somebody. I brought it up to one of my friends. And he was like, what? That is such a random pick. I go, well, I gave him the background on it. But do you remember Rosetta Stone? Is the guy who's here who asked us to take a look at it, RST. Do you remember this?
Mm-hmm.
And you remember what you said about it?
I don't. I probably liked it because it's an uptrend.
Yeah, you did. You absolutely did. So people who's here? The guy who asked for that? Nice. Jesse just signed up. He said, great stuff. Awesome. He took advantage of it. It's $79 for a year, folks. Like literally don't go buy your next pair of shoes. Don't go buy Starbucks for the month and make some money. So it was just a great, yeah, JB, maybe was it you, JB, that said it? RST, were you the one that was spotting that? No, he wasn't. But yeah, man. I just wanted to call that out because this was a live. I can see if my team can actually go try to see. This is maybe 2 or 3 weeks ago, maybe a little longer, and we were going back and forth. And we always ask anybody got any stocks they want us to take a look at. And someone threw out Rosetta Stone, and you had nothing on it. You didn't have anything prepared on it. You didn't, whatever. You took, one.
I know it's sweet. I don't know if you've ever taken one of those courses. My wife for like a week was learning Spanish.
Yeah, my father actually is really big into it.
It's pretty. I can see why it works. It's pretty awesome.
Yeah, it's pretty awesome. Their approach is like pretty sweet, but it's all
not that impacts our decision making on the stock.
Nope, we don't care at all. But anyway, I just thought that was like a super, super interesting angle. And so I'd love to pull out if Itai, if anybody has that written down, I think you said it was like, let me see if I have it in my notes, if I can pull this up.
Michael's asking if the CTO sold 50,000 shares today. Does it affect my opinion? I'm not so much interested in people selling because there's a million reasons why a C-suite exec will be selling in stock or her stock. pay for a daughter's wedding, diversification, buy a home, whatever it is. I'm more interested in when they're buying, because they could be selling for a million reasons, but there's only one reason why they'd be buying.
That's right. That's right. I love it.
And it's not because they think it goes down.
Yeah, and Michael, thank you. So guys, we get so much better material. Yes, we get so much better material when we get feedback from you guys. So please, like, there's no such thing as bad questions or dumb questions. We may rip on each other, or we may chuckle, or we might do this, but in all seriousness, it's all good questions. Because here's the thing, that's a fundamental question, right? You're asking if this person does this.
No, that's technical.
What do you mean? So, because he sold the 50,000 shares.
So are we talking about the behavior of the market and its participants, or are we talking about the goods and the services that a market is dealing with? I would argue that C-suite exec transacting is the behavior of market participants, not the fundamentals that driving that company. That's technical all day, baby. Don't sell it short.
I was reading that like it was totally fundamental, like it's a
absolutely not. That's ours.
That's on your side. You want that one. You want to put that one in there.
I don't necessarily care so much about the sells. I'm more interested in the buys, because like I said, there's a zillion reasons why you'd sell your stock.
Yeah.
There's only one reason why you buy, though.
Yeah, that's true. That's true. All right, I stand corrected. We'll keep it in the tech camp. He wants it. JC wants it. He's gonna get it, and I trust your judgment on that. So that's good. Jesse's asked, do you like E-Trade compared to other trading apps?
I hate them all.
Yeah, I actually concur with that. I hate
them all.
I don't mind TD Ameritrade. I've just been on it for a long time, so I get them.
I mean, they're free for a reason, right? You get what you pay for.
True.
So anybody who's ever been like on the professional side and used something like Merrill Pro or Goldman, these things are ridiculous.
Some of them are really bad.
Yeah.
The Wells Fargo one.
Like all these free ones, they suck. Listen, they serve a purpose. For 99% of humans, they're perfect. You know what I mean? You don't need anything else, right? So for me, they're all the same. Like there's nothing special about them, right? Like they all need so much, but then that's why they're free and you get to trade for free. And like, that's great. You kidding me? You told me that 25, if you would have told me 25, 30 years ago, that the tools are so much better than they were then, I would be like, man, it's probably going to be really expensive then. No, now it's free. And soon they're going to be paying you to trade. It's $1 every time you trade. Watch, you'll see. It's coming.
I agree. It has to. All right, folks. Well, we always end our charting room with words of wisdom by JC. Take that sip of wine, and what are your parting words, my friend?
I think you really need to think about what you're drinking when you're eating something. You know, I got this guy. He's asking me if what he should be pairing with his salmon. He's doing a salmon sous vide, and he's like, "What do you think about a Riesling?" I'm like, I couldn't think of anything worse. Too much acid to go with that creaminess of the salmon. You don't want all that acid because there's no way that they can keep up with each other. You want something creamy, like a sake, right? Or a Chardonnay, like a white Burgundy, or maybe a white Rioja, perhaps. Something with or a Viognier would be very nice also. But having something like a Riesling to go with that salmon, you're going to ruin your dinner. So I want you to really think about that. And, if you're going to be bougie, I think you need to really do it. I think you need to do it right. Like a half-ass bougie.
Absolutely. I will write a book one day. Don't be a half-ass bougie.
You can't. If you're going to be bougie, do it right.
Go all bougie. Right. Go all bougie.
Sushi with a Cabernet Sauvignon makes me want to run my head against the wall.
Yeah. Yeah. Just stop. Right? Just stop. Like, why? What's the point, right? Go all in or all out, right? You either gonna go and be on a budget and you're gonna kind of piecemeal things together or whatever, and that's what you're calling it. Okay, you're eating off of paper plates, fine, right? Or you go all in.
There's nothing wrong with eating out of paper plates. There's nothing wrong with that. But like, if you're gonna have like a Chianti, make sure there's some meatballs or something.
There's an experience, right? If you want an experience, seriously, I tell my kids this, I tell my wife, I tell my friends this. Getting prepared for something, like actually taking your time and getting prepared, there's an art and like a part of that. It's called Advent, right? It gets you excited. Buying gifts for people for Christmas. that if you don't do shit for Christmas whatsoever, how do you feel about Christmas? You fucking hate it. You're like, I don't want anything to do with it, right? Because it's like you weren't prepared. You get everybody their present, and you decorated the tree, and you were listening to music, and you were like counting down the days, and you were marking it off with your kids on the calendar. I don't care. You're either a sociopath and have no feelings whatsoever, or you're pretty darn excited about it. So if you want to go with a nice meal and you want the nice wine, you want this, then go grab the nice crystal. You got it. It's sitting there. Do the dishes, sit down, prepare it, like clean it off, dust it out, like get the nice silverware out. That's what I mean by like go all the way. Absolutely nothing wrong with paper plates. I'd say 25 days of the month I'm eating off paper plates. All right. I've got 2 kids. So I'm the last guy that'll ever complain about that. But if I'm gonna go and it's gonna be a nice meal, then I want to do it all. I want to cut up a little.
And then don't be like my father-in-law and my brother-in-law. These 2 psychopaths. Speaking of psychopaths, they come in, they start eating dessert. Like as I'm like getting the appetizers ready. It's like, what are you guys doing? Like you're ruining everything.
Yeah.
I think you could be a little smart, you know?
Yeah. Yeah. Well, you
don't be so stubborn like my in-laws.
I love it. All right, man. Well, look, we got Steve who signed up. Thank you, bro. Really appreciate it. See you later. I know he had to go. A couple other people. Jesse, you signed up as well. Thank you guys so much. This is absolutely a no-brainer for $79 for 12 months of this access to this service. Show me something that you get better value of. I'd love to see it because I don't think it exists. It's what I do for a living. So make sure that you guys, sign up for that. And all right, so thank you, JC, for your time, man. I really appreciate it. Sorry we couldn't get to everybody's questions. Thank you so much for being loyal. Some of you guys keep coming back week after week. This makes us show up, makes us excited. So JC, I can't wait to hear about your grapes tomorrow. Shoot me a text, my friend.
Oh, we got some time. We got another week or so before we get the results. So.
All right, well, I'll keep an eye out for it. Have a great weekend, everybody. Take care.
Later, guys.
Bye.